Hello everyone, my name is Seema, and before I begin with today's topic, I want you to take a look at the sales volume growth in Dubai over the past 15 years. The city has seen 72,000 transactions in 2009, 95,000 transactions in 2023, and now year-to-date October, 147,000 transactions. That's a tremendous growth of 38% versus year ago, with the highest sales value of 364 billion dirhams. That's $100 billion. Now, of this, 80% are residential transactions, with an average ROI of 7 to 8% in Dubai, versus global markets such as London, Singapore, Mumbai. These give you returns of less than 5%. So investing in Dubai real estate is on everyone's mind, and everyone wants to know what are the areas that will give them the highest returns. In everyone's mind, there are some common questions like, what are the top areas with the highest rental yields in Dubai? Should I invest in Business Bay and Jumeirah Village Circle, or should I invest in the south of Dubai? Do one-bedroom apartments give the highest yields? Should I invest in multiple one-bedroom ready apartments in, say, Jumeirah Village Circle and get immediate rental returns? Or should I buy one off-plan unit with a good developer? What's driving these high rental yields? Now, if you want answers to all of these questions, then watch this video till the end. But please note that I'm simply listing the areas and their ROI. I'm not recommending that you invest in the first 5 high ROI locations. This is why in my analysis today, I've sorted the data into ranges, with the highest at 7.9% and the lowest at 4.6%. And I've then grouped them into investor segments. And within each segment, I will be sharing my database recommendations. Let me first clarify what is ROI. ROI, or the return on investment, it's the total amount of rental income over the purchase price of the property. Today, I will be focusing on gross ROI, as I will not exclude any annual service fees from the rental income or property acquisition fees of ranging 4 to 6% from the purchase price of the property. Also, please note that I will only discuss long-term rental yields. I will shed some light on short-term rental yields as well. And finally, I want you to know that the data, the rental yield data I have used for my analysis, it's taken from Property Monitor, which is the official transactions by the Dubai Land Department. Starting off at number 1 with an average ROI ranging from 7 to 9% are areas such as International City at 9.11%, Furjan 7.73%, Jumeirah Village Circle 7.55%, Arjan 7.4%, Dubai Silicon Oasis 8.73%, and Dubai South Apartments at 7.12%. Let me first shed some light on these locations. International City, Furjan, and Jumeirah Village Circle, these are all communities initially developed by Nakheel, but there are multiple developers who can purchase land here and construct their own buildings and townhouses. We call these multi-developer communities, as it's not limited to one single developer. Now, Arjan and Dubai Silicon Oasis, these are also multi-developer communities. Arjan is located in Dubai land and it enjoys proximity to schools and hospitals, and here you will find low-rise buildings. While DSO, it's located next to Academic City and has mainly apartment buildings. All these areas will provide you with a high ROI ranging from 7 to 9%. Now, why is the ROI so high in these areas, you may ask? The answer, it lies in the affordability of the people living there. All these areas offer affordable living spaces, and the people living here cannot afford to buy. So they will choose to rent, and this is what drives higher rental returns. But before diving into an investment based solely on attractive ROI numbers, think of it like peeling an onion. The outer layer may look shiny and tempting, but you do need to peel back the layers to see what is inside. Now, while the ROI in these areas is high, the capital appreciation here is low. And for privacy purposes, I've blanked out the building names. But in this table, you can see that properties purchased in these areas haven't seen any capital appreciation since they were launched. However, they've of course delivered on rental returns, with the exception of Dubai South, which I will talk about shortly. Another key point to consider is that the supply in these areas in the coming years is a watch out. So within JVC, oversupply is a major watch out. Out of the 172,000 units that will be supplied in the next few years in Dubai, 30,000 will be in JVC. So now as an investor, what do you do if you want to capitalize on the high ROI and also get capital appreciation on your investment? My answer to you is look at the south of Dubai, closer to Expo and the new Maktoum International Airport. Currently, apartments in Dubai South have an ROI of 8% in October and 7.12%, like I mentioned, in the past 12 months. The South, it's gaining popularity and it's bound to appreciate due to the proximity to the biggest airport in the world, biggest port in Dubai, connectivity via the metro and the Etihad rail in the future. Government has spent more than $300 billion here, and private sector has invested another $200 billion. And as per the D33 economic agenda, by 2030, this area will contribute to 35% of the GDP and will generate 450,000 jobs and home to 1 million residents. And you know, Dubai government is one of the most successful governments in the world. So when they say something, they do it. They deliver their promises. Now, what can you get here? There is limited inventory, to be honest, in the secondary market. However, within off-plan, there is Emaar South, which is a golf course community by master developer Emaar. Now here you can get a one-bedroom golf-facing apartment for 1 million dirhams. And once ready, these can be expected to rent out for 80 to 90,000 dirhams. How did I come up with that number? Currently, only 15% of the Expo commercial district is occupied, and still a one-bedroom apartment in Expo Village is renting for 72,000 dirhams per year. And given the number of people who will work here, an expected rent of 80,000 is conservative according to my calculations. Add to it the fact that it's golf-facing. And we know that golf-facing units, or units on the golf course, let's put it that way, they can command higher rental returns of up to 20%. 3-bedroom townhouses in Emaar South, for example, these were launched for 1 million dirhams and today 2.1 million dirhams. That's a 200% capital appreciation. And the community is not fully ready for those of you living in Dubai. The airport is not fully functional. So you can only imagine where the prices will go in the coming few years. Now, another attractive opportunity here are apartments within Expo City. These are currently also off-plan. Here you can get one-bedroom apartments ranging from 1.4 million dirhams to 2 million dirhams at 1,500 to 1,900 dirhams per square foot. The infrastructure here is ready and 65% of the commercial space within Expo has already been leased. This community is going to host exhibitions at the Dubai Exhibition Center, concerts and events at the Vassal Dome and an amphitheater, and it will make an attractive short-term rental opportunity here as well. Add to it that the fact that the community is fully sustainable. So to summarize, high ROI doesn't mean great investment. If you are looking to invest in affordable living spaces with high ROI, then today you have an excellent opportunity in the south of Dubai. Invest here with a master developer and you will not only see high ROI, but also capital appreciation given its strategic location. Now moving on to the second highest range of high ROI communities. In the range of 6 to 7% ROI are waterfront communities such as Dubai Marina, Jumeirah Beach Residences or JBR, Blue Waters Island, and Emaar Beachfront. Waterfront properties are prime real estate that are always high in demand, and they offer an attractive lifestyle that cannot be replicated easily. On top, there is a limited supply of waterfront communities as the coastline is limited to 72 kilometers. Apart from high ROI of 6 to 7%, these communities have offered significant capital appreciation in the range of 300 to 400%. This is even higher than downtown Dubai, which is home to the world's tallest building, the famous Burj Khalifa. So in reality, if you bought in these areas in off-plan, your ROI today is much higher than the 10% if you calculate it on the opening price. Now let's take a closer look at these communities. Dubai Marina, developed initially by Emaar in 2001, has tall residential towers and is home to more than 120,000 residents. It is the most photographed skyline in the world and it's a tourist destination. However, traffic here is always an issue. ROI here, it's 7.19%. JBR, developed by Nakheel, is located right behind Dubai Marina with an ROI of 6.3%, and it also has major traffic issues. Average rentals for one bedroom in Marina and JBR, they are in the range of 95 to 100,000 dirhams. Now, let's look at Blue Waters. Blue Waters, developed by Miras, has an ROI of 6.4% over the past 12 months. It is an island close to Marina with residential, retail and hospitality developments. Average one-bedroom rentals here are quite expensive. We're talking 300,000 dirhams. Now, the next community is Emaar Beachfront. It's located next to Marina, developed by Emaar, has an easy access to the community when residents skip all the Marina and JBR traffic issues due to the extension link announced by RTA, linking Sheikh Zayed directly into Dubai Harbour. Average one-bedroom rentals here are 170,000 dirhams. Now, all these communities have seen significant capital appreciation in the range of 300 to 400%. Blue Waters, which was launched at 2,000 dirhams per square foot, currently 6,000 dirhams per square foot. Dubai Marina, currently at 2,800 to 3,000 dirhams per square foot. Emaar Beachfront, launched at 1,400 dirhams per square foot. Today, it's at 3,800 to 4,500 dirhams per square foot. Now, if you are looking to enter the waterfront community at affordable prices of, let's say, 2,400 dirhams per square foot, then there are excellent investment opportunities in Mina Rashid and Maritime City. In Mina Rashid, Emaar has launched its largest waterfront master community called Rashid Yachts and Marina. 65% of the population works and lives here, and this community will be the closest freehold community for these people. The density of the community will be low, as it only has low-rise buildings. It has a promenade, a canal pool, metro connectivity, theatre, beach clubs, and as per Vision 2040, it falls under the Cultural Heritage Club. Here you can get a one-bedroom apartment for 1.9 million dirhams at an 80-20 payment plan. And once the master community is fully ready, it will command a high ROI, and we can expect a decent capital appreciation here in the range of 90 to 100%. And additionally, from a short-term rental point of view as well, since the area doesn't offer many good 5-star hotels, this community is expected to deliver on high short-term rental returns. Now, another attractive investment opportunity in the waterfront segment is in Maritime City. Now, this is a multi-developer community. However, Omniat, who has now rebranded themselves as Beyond, an esteemed and exclusive luxury developer, has announced the launch of its first ever community within Maritime City. And they've acquired land reaching 11 million square foot, which will have beaches, a mall, school, and a hospital. And here you will get a one-bedroom for 1.9 million dirhams. We're talking 2,500 dirhams per square foot at a 50-50 payment plan. And just like all the current waterfront communities in Dubai, we can expect similar ROI here too, while entering at these price points. And you will also benefit from capital appreciation. A one-bedroom in Anwa by Omniat, for example, is currently renting for 100 to 135,000 dirhams. And the community today has no infrastructure at all. It's a lone standing building, but with excellent waterfront views and construction all around, by the way. You can only imagine what the rentals would be once the community is ready in 4 years. Now, the two concerns people generally have here are, one, being the connectivity. But the RTA has completed 50% of the project that covers 3 bridges spanning 3.1 kilometers that will ensure smooth traffic flow here between Sheikh Rashid Road and Al Mina Road. And the second concern here is typically that there is a port here and it seems congested. But that will be moving towards Jabal Ali soon. Now, waterfront in Dubai is limited and investment here delivers a high ROI. An investor recently asked me, Seema, has any waterfront community in Dubai performed badly? And the answer is none. waterfront communities on the coastline in Dubai have always appreciated. So let's move on to the third group of communities that deliver high ROI in the range of 6 to 7%. These are areas such as downtown Dubai, Business Bay, Dubai Creek Harbour and Dubai Hills Estate. ROI here is similar to waterfront communities, with Business Bay at 6.42%, downtown at 6.17%, and Dubai Hills Estate at 6.82%. The common factor here in these communities, it's the proximity to the city centre. Let's start by talking about Business Bay. Now, I mentioned earlier how single developer communities generally have price appreciation and they are less volatile in prices versus multi-developer communities. Now, in this graph, you can see the price per square foot in single developer communities like Dubai Hills Estate versus multi-developer communities such as Business Bay. Now, Dubai Hills Estate, it's a golf course community by Emaar located in the heart of Dubai. ROI here is 6.82% for the past 12 months. And this is mainly because of the 80 to 100% capital appreciation that we see here. Investors who bought off-plan are sitting on a 20% ROI as the average prices per square foot have gone up from 1,300 to 2,000 dirhams per square foot. Now, with this proximity to downtown Dubai Marina, as well as the south of Dubai, investing in this community will not only provide a high, or let me call it a decent ROI, but will also provide capital appreciation. Let's look at downtown Dubai. Developed by Emaar and home to Burj Khalifa, is also within the high ROI and high capital appreciation bracket. However, prices here, they're now in the range of 3,800 to 4,000 dirhams per square foot. A bit unaffordable if you ask me. If you want to invest in downtown, but you cannot afford the current prices there, then Dubai Creek Harbour should be on your list. Termed Downtown 2.0, this community is 3 times the size of downtown Dubai. It's a combination of downtown and marina merged into one community. It'll have 4 hospitals, multiple entrance and exits, solving all congestion issues currently seen in downtown Dubai. The community has a promenade, central park, a beach, close to the only natural sanctuary in Dubai, while prices are 50% of downtown and marina. Today, with 1 exit and an incomplete infrastructure, the ROI here is in the range of 6%. So with additional development, this is expected to increase further. In Dubai Creek Harbour, you can get a ready 1-bedroom apartment for 2 million dirhams at 2,400 dirhams per square foot and an off-plan for 1.8 million dirhams. It is key to note that one of the highest rental income growth is in Dubai Creek Harbour. It means that the absolute rental has seen a high growth. A 1-bedroom in 2022 was 66,000 dirhams, while today it's at 95,000 dirhams. The fourth area where ROI is in the range of 6 to 6.7% are affordable townhouse communities such as JVC villas and townhouses at 6.7% and Damak Hills villas and townhouses at 6%. Both these communities have established themselves as affordable living areas when it comes to townhouses and villas, as you can get townhouses under 3 million dirhams here. Now, if you are looking to enter the affordable townhouse segment, then I would suggest go with Damak instead of investing in JVC. As we have seen earlier in this video, that when a community is developed by a single developer, it offers less volatility in pricing. And JVC is a community that has multiple developers. Damak is a well-reputed developer that has come up with attractive projects such as Damak Lagoons, Damak Hills, Damak Islands, to name a few. These communities are located in urban Dubai, therefore providing investors with a good opportunity to invest at entry-level prices of 900 to 1,000 dirhams per square foot, sometimes even lower. Now, let's look at the last one on my list. These are villas by master developers such as Emaar and Dubai Holdings that have delivered ROI of 5 to 6% over the past 12 months. They include villas and townhouses in communities such as Arabian Ranches, Dubai Hills Estate, Maidan, Emirates Living. Now, from an ROI perspective, these numbers are low compared to the high 9% ROI we saw earlier in areas such as Arjan and JVC apartments. However, the reason is that the capital appreciation here in these master communities is significant. And when you hold your property for more than 3 to 5 years, the gain in capital appreciation far exceeds the gain in rental returns. Now, I'm sure you must be thinking that Seema, today investing in communities such as ranches, Dubai Hills Estates, Maidan, the entry point for villas here, they're higher than 7 million. Then my answer to you is look at Emaar South, Nakhil's Villanova, look at Valley 2.0, and look out for Emaar and Nakhil's upcoming launches in 2025. The prices of 3-bedroom, they start at 2 million dirhams. Now, we've come to the end of today's discussion on ROI. But before I leave, I wanted to make sure I've answered all the possible questions. At the beginning of the video, I told you I would address the question if a 1-bedroom gives higher yield than a 3-bedroom. And based on my analysis, a 1-bedroom gives similar returns versus a 2-bedroom in the same tower. But what matters is 2 things. 1, investing in a master community versus a multi-developer community, as the returns will be less volatile here and the capital appreciation higher. And the second is that the same can be said about townhouses versus apartments. A townhouse in JVC has an annual ROI of 6.7%, but an apartment in Dubai Hills Estate has an annual ROI of 6.8%. But Dubai Hills Estate offers a better capital appreciation versus JVC. I hope this video has made you more knowledgeable on the real estate landscape in Dubai. But before I say goodbye, I'll leave you with a few rules of thumb that I always advise to my investors. The first one is hold your property for 3 to 5 years. Avoid flipping. Second, have a balanced risk to reward ratio. Do not over leverage yourself. And the third is invest with a trusted developer and choose your property consultant wisely. For any questions related to your investments, you can reach out to me on the number below. I'm Seema Balwani from Experience Realty, signing off.